Good morning, everyone, and welcome back to Morning Markets on Wednesday, the 5th of August. There's a number of things to discuss this morning, the first of which was just looking at equity market performances across the globe yesterday. We continue to see equity markets trend positively, and one of the factors that does appear to be supporting equity markets at this point is the results season, and results are generally coming in better than expectations, although I suppose there the caveat has to be that these expectations were very low. They were set as analysts were trying to understand the impact of COVID-19 on businesses. So very low expectations, but companies coming in and beating those. The other area that we were looking at this morning is just what's been happening in the sovereign bond market, where we've continued to see yields move lower across the globe. And remember there, as yields move lower, that means the bond price is increasing, so it's a positive overall return for the investor. And if we look at just what's happening there, we've got the German bond market trading on a negative yield of 0.55, with UK 10-year gilts trading on a yield of 7 or 8 basis points, and also we saw US Treasury trade at 51, 52 basis points. So those all trading at all-time lows in terms of yield, but then all-time highs in terms of prices. So that's an interesting angle, an interesting thing that we continue to observe in markets. And the other side of that is that we continue to see gold move higher. So gold traded through $2,000 per ounce yesterday and has continued to move higher during the Asian market early today as well. And I think in those two situations, why is that? It speaks to the uncertainty. Why are bond yields at low levels? Why is gold at record highs? Speaks to just the uncertainty that there is in the economy at this point in time as we see and deal with COVID-19, but also the fact of the large amounts of fiscal support that have come into economies. So if we look at that, think about that, it looks about $20 trillion in aggregate if we add up what's happened across the globe, or some 20% of global GDP. That's significant support that has come in, but that does result in fiscal deficits for governments to deal with and for investors to consider. So safer haven assets have continued to perform well, and that's sovereign bonds and gold. The other side of that as well is that we've continued to see silver perform very strongly. Silver had a very strong performance through the course of July. That is twofold. One, it plays into the precious metal discussion with gold, but also the industrial uses of silver as well. So keep in mind that we have seen economic activity continue to improve as lockdowns have been eased, so that's supporting that industrial use of silver and that industrial recovery as well. We then think about other commodities that have been negatively impacted, and one there is oil. We just have to look at the results that the oil majors have been reporting over the past number of weeks to look at the problems that has caused them, both in terms of their current operations, but also in their future operations as they've had to reassess their longer term price assumptions that they use for oil. And that was very evident yesterday in the results that we had from BP. So we could see the real impact coming through, but also the impact that it has on their cash flow generation and their ability to continue with the dividend payments. So we saw the dividend from BP reduced. It was reduced in half yesterday, and also a commitment that would be their ongoing payout going forward, so a significantly lower level, and also to use share buybacks as a way to return surplus cash. I think the other thing within the BP results that's really interesting to observe is just the change that they are discussing over the medium to longer term within their business model, and using the cash flow that they receive from the traditional oil and gas business to reinvest into lower carbon technologies and focusing on that as areas of growth in the future. That's potentially a trend that we're seeing across a large number of the oil and gas companies as they try and make this transition, but it's also something that may have been accelerated as a result of COVID-19, and we continue to see that coming through. So it may be that COVID-19 has spurred some of these companies to start and consider and to accelerate their moves to change. Other things that we touched on briefly was just ongoing improvement in industrial orders in the US, improving month on month into July. And overnight we also had the services data, the PMI, Caixin Services PMI from China. And whilst it fell from 58 to 54, remember that that still remains in expansion territory. Within that, I think it's interesting just to note that the international component continues to remain weak, so it's very much about the recovery in the domestic economy. That's it for today. Please join me again tomorrow. Many thanks.